Hello and welcome to the SCI video series to support the Accounting Processes course. In this video we're going to be revisiting the use of the allowance method for estimating the bad debt expense for a business. In the prior video we looked at the percentage of AR method. In this video we're going to be looking at two additional methods. The first method we're going to look at is the aging of accounts receivable. With this particular method, we classify the different accounts receivable according to how long they have been outstanding. This is a process known as aging, and we'll get into it in more detail here shortly. Basically, what we need to look at is how long an account has been past due. One of the things that businesses know is that the longer an account has not been paid on, the higher it is their chance that they're not going to be able to collect that money. So when you're making your estimate for the uncollectible accounts expense and the amount that you're going to put into what's called allowance for doubtful accounts, you're going to look at it based on these classifications. So let's take a look at a sample for Kathy's Kitchens. In this situation, we have 4 customers that are shown and then a list of all of our other accounts there. Now, the first column shows our balance. This is the amount for each of the accounts regardless of how old the account is. The next column shows what accounts are considered current. And what we mean by current is that they are still within the terms of their contract. When we set up a relationship with a client and we allow them to purchase things on credit, we set up terms. Most common would be something like net 30, meaning when we send them an invoice, it has a date on it, and they have 30 days from that date to pay that invoice. As long as they're within that 30 days, they are considered current. Now, as soon as they go 1 day past the 30 days, they are now in a category of what is called past due. And the first category for past due is 1 to 30 days past due. Now, what we know from our business experience is that when somebody goes into the past due category, the chance that they are not going to pay goes up. And the longer that they are past due, the higher the chance that they are not going to pay. So using the aging method, we're going to estimate different amounts for each of the categories. 1 to 30 is going to have a slightly larger percentage of being uncollectible than the current category. 31 to 60 is going to have even more chance of being uncollectible than the 1 to 30. And anything over 60 days will have the highest chance of not being collectible. So what we're going to do is we're going to take our totals for each of these categories and multiply them by a percentage. This percentage, again, will come from industry experts or from our prior experience. So let's take a look at how we would calculate this. For something that's over 60 days past due, that we know has a very high chance of not being collected, we're going to use an estimate of 60% or 0.6 for calculating how much we think is not going to be collectible. So if we take our balance of $2,400, multiply that times the 0.60 or 60%, we're estimating that $1,440 of all the amounts in that particular category are not going to be collectible. For anything that is 31 to 60 days, we've estimated that about 20% of that is not going to be collectible, so we multiply that times the current balance and come up with $320. The next one, the 1 to 30 days past due, we've reduced it to only 6% because we're getting closer and closer to the accounts that are current. So in this case, of the 7,000, only 420 of it is not going to be collectible. And then finally, for our current accounts, we know that only about half of 1% of those go bad. So we take our current balance and multiply that times 0.005 to come up with an estimate of only $190 of the 38,000 is likely to be uncollectible. What that means is that we have a total estimated loss from doubtful accounts of $2,370. Now, the method that we used in the prior video for determining the new balance for our allowance for doubtful accounts is going to carry over into this video. This time, we're going to take the $2,370 and treat that again as our new balance for allowance for doubtful accounts. Making the same assumption that we have $108 in the allowance for doubtful accounts as a credit entry is going to allow us to then subtract the $108 from the new balance of $2,370 to come up with an adjusting entry amount of $2,262. Just as we used in the prior method, the accounts will flow the exact same way with your journal entries. Now, the third and final method that we're going to talk about for estimating the allowance for doubtful accounts amount is using a percentage of net credit sales. What we do is we look at all of our credit sales, not our cash sales, but our credit sales, and we multiply that by a percentage. Again, this percentage is going to be based upon our prior year knowledge or industry experience. So we go through and figure out how much of this that we want to estimate for bad debt. Now, sometimes in your textbook you're going to be given the amount for net credit sales. Other times you're going to have to calculate it. So let's run through how you would calculate the net credit sales amount when you are given one or more of these particular categories. So let's start with our total sales. If our total sales for both cash and credit equaled $900,000, and we wanted to find out what our net credit sales were, then we've got to start the process of backing out our cash sales. So if we take $900,000 and we subtract $283,000, we come with a total of credit sales then of $617,000. Now from that, we've got to remove what are called returns and allowances. This is something that you may have covered in your Accounting 2 class, but if not, we're going to cover it again here briefly. Whenever you make a sale to a customer, you have the situation arise where sometimes they return that good to you. At that point, you would reduce the overall net realizable value of your sales. Now, sales is one of those accounts that we do not reduce the value in the actual account. We use a contra account called returns and allowances. It has the opposite debit and credit setup of the sales account. So instead of reducing the sales, we add an amount to returns and allowances. Now we're going to have returns and allowances for both our credit sales and our cash sales. And since we're after the total for net credit sales, we need to separate those two. So if we have $617,000 in credit sales, and of all the returns and allowances, we know that $17,000 of them are from credit sales, then we can back the $17,000 of returns and allowances on the credit side from our credit sales of $617,000. That means our net credit sales for that period is $600,000. Now the amount that we estimate this by, again based on our knowledge or our industry experience, is going to be much smaller than the method that we use for percentage of AR, because this time we're taking it from all of our sales, which is a much larger number. So in this case, they have said that the amount will be 3/4 of 1%, or 0.75%. Now we need to convert that into a decimal. And if you remember from your math classes, to convert a percentage to a decimal, you simply move the decimal point 2 spots to the left. So the amount that we're going to use to multiply times net credit sales is 0.0075, which gives us an estimated amount of $4,500. Now in this method, we do something slightly different than we did in the prior two methods. This amount of $4,500 is what is going to be added directly into the allowance for doubtful accounts and into the uncollectible accounts expense. We are not going to be concerned with whether there is a prior balance in allowance for doubtful accounts. We are simply going to add that directly into the two accounts with the same journal entry that we did in the past. So we take our net credit sales, we multiply it times the percentage that we estimate, and then we do the entry for the full amount into uncollectible accounts expense and allowance for doubtful accounts. We're not going to be concerned at all about whether there was a balance, debit or credit, in the allowance for doubtful accounts. Thank you for watching, and in the future video we're going to cover how to actually write off individual accounts and, if necessary, reinstate them and pay them off. Thank you for watching, and we'll see you in the next video.